In a world where jobs are how most people make money, one man, one desire, one challenge dares to break the mold. Welcome to the Old Dogs REI Network, where we don't work for money. Money works for us. Coming soon. Viewer discretion advised.
Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manacero.
Welcome to the Old Dogs REI Network. I'm your host, Bill Manacero, and this is the show where 50-plussers and anyone else who wants to join us get solid, no sales pitch real estate investing advice to help generate real cash flow. This podcast airs twice weekly on Mondays and Fridays, and if you aren't already a subscriber, go to iTunes or Apple Podcast, type in Old Dogs, spelled D-A-W-G-S, find our podcast and subscribe. Well, we've got a great guest today who's going to address an area we have talked about on this show, and one that we have a lot of interest in, and that's about co-living. His name is Johnny Wolf, and he is the CEO and founder of HomeRoom Co-Living, one of the fastest growing co-living companies in the United States. After starting his career as a financial analyst in Silicon Valley, working for such companies as EA, ScanDisk, GuideSpark, he relocated to Austin, Texas to pursue real estate investing full-time. His love for real estate investing and living with roommates motivated him to start HomeRoom in 2017. After an unusually terrible Craigslist roommate experience, I guess we have to touch on that one. In 2020, HomeRoom boasted 99% on-time rent payments. That's pretty amazing. Full occupancy and zero evictions. Sales velocity for HomeRoom is up 300% in 2021, with hundreds of happy residents across 23 cities and 3 states. Powered by investor funds, HomeRoom recently expanded to Dallas and Austin. Johnny still lives in one of HomeRoom's first co-living houses in Kansas City and enjoys hanging out and surviving the pandemic with his awesome roommates, especially on Chicken Wing Thursdays. Well, Johnny, welcome to the Old Dogs REI Network.
Yeah, hey, thanks for that great intro.
Well, thank you for coming on. I'm real stoked to have you on. This is going to be a great discussion here.
Yeah,
I thought maybe before we get started, digging in, is maybe you could just kind of give us your story. Where you came from, how you got into real estate investing and co-living.
Yeah, so out of college, I lived in the Bay Area. I was working for startups and technology companies, doing financial analysis, data science, as well as operations. And behind the scenes, I was investing in real estate. My first real estate investment was in 2008 in the area of Texas, the oil area, the Permian Basin, where Friday Night Lights is based out of.
Oh, yeah.
And so So I did that for about 7 years and decided, I think real estate is the right move for me. So I wanted to get way more involved. I moved to Austin in 2015. And the initial plan was for me to move with 4 friends, and we couldn't find a landlord or a 5-bedroom house that would rent to 5 roommates. So I personally bought a 3-bedroom house, added some walls and created a 5-bedroom house. And we all lived together. It was a really cool experience. It was a very social environment. You had a maid, yard care. But yeah, behind the scenes, I was making really high returns because I was renting out each room separately. I ended up buying a number of other properties in Austin from 2015 to 2018. and renting them all by the room. And my returns for that portfolio were 500%. And I shared those returns with a few friends in the Bay Area, and they were really jealous. Jealousy is like really the number one emotion you want from your friends when you talk about your investments, I think. And so they were asking me, how do I invest how you're investing and rent out properties by the room? And there was no way for them to do that. So I saw a business opportunity that could help investors make more money, but also provide affordable housing to tenants. And so I emptied my retirement account, moved to Kansas City, and started HomeRoom in 2018.
Wow.
Yeah.
So you, when you moved to Austin area, were you still in the tech industry?
Still in the startup industry, yes. Yep.
Oh.
It was a pharmaceutical technology startup.
Okay, gotcha. And so you went there with not necessarily the intention of starting a real estate business, but you just got innovative there and subdivided the house and just started booking it up. That's great. And do you remember it was a 3-bedroom, like 1 bathroom, 2 bath?
3 bedroom, 2 bath.
2 bath. And you remember what you paid for it?
It was $288.
And so you just just went ahead, and initially it was just a place to stay, but you saw got the entrepreneurial itch to take what you're doing there and just duplicate it. Is that correct?
Yeah, it was working really well. I wasn't paying anything for rent personally. I was cash flowing in Austin, which at the time was pretty expensive, but not like it is today. And I just felt like I could do the same thing over and over again. Obviously, there was a lot more, underneath the surface in terms of like finding roommates and managing the house. But the returns made it worth it because they were so good.
So you're buying these places and setting up. Now you were working through most of this, or at some point you decided, hey, I'm going to quit and do this full time?
I was actually working through that entire period.
Okay, gotcha.
As a director of finance and operations, yeah.
Okay, so how is that? I mean, you're sort of the property manager for all these places, right? While you have to screen tenants and so forth. You're doing that while working a full-time job. That would be a little bit of a challenge there.
Yeah, I mean, it's definitely not easy, and part of the reason I started HomeRoom, which is my company, which helps investors buy properties and rent out each room separately, is because I didn't want to manage properties forever. And so I needed someone to do it. And I'm not sure if the choice of starting a company was the easiest solution for me there, but it's one that worked. So now all my properties are managed by HomeRoom, which is fantastic. But yeah, it was a challenging time, but I think it's good to expose yourself to some light management early in your real estate investing career. If you have time, if you're kind of starting the journey, I think it can be helpful. If you're looking to deploy capital pretty aggressively, and you could find just a good manager to help you do all that too. But yeah, if you're, kind of early in your investing career and, every dollar matters, I think it's a good experience.
And that was kind of interesting. You mentioned the first house. You had a maid that cleaned up after you guys.
Yeah, it was one of the framework. One of the questions we get is what about roommates' disagreements and how do roommates get along? And there were a few things that seemed to create tension between the roommates, and one of them was like dishes in the sink, dividing bills and getting paid back. And just general. And so with HomeRoom, we've actually worked to kind of like I did at that property, is do things that will remove stress from the roommates. And so by having a maid every month, it took away that pressure that you need to clean, or why isn't this one roommate clean as much as I am, and create just a more peaceful environment. So that's something I did at that house, and that's something I did at every subsequent house as well.
And the maid only comes in once a month?
Yeah, it's enough to make sure that it stays in good condition.
Gotcha. And do you rent like a typical rental where, a 12-month lease?
We're more flexible at HomeRoom today. We do 3 to 24 months.
Okay, gotcha. So you can go anywhere in
Mm-hmm.
between that, and they pay monthly. Generally.
Yeah, it's monthly, just like a typical. I rents due on the first.
Now you're a tech guy, or at least come from that background. I know you're more on the financial side of things and management and so forth. But did you see that there'd be an opportunity here to maybe set up a portal or something to to attract people and to bring in potential tenants?
Yeah, so HomeRoom actually is a portal. So when you go onto the website, 90% of our tenants will actually book rooms without ever seeing them in person. So they can actually see professional pictures, take virtual tours, see the roommates who live there, learn a little bit about them. And then they're able to apply for a room within 15 seconds instead of kind of a typical multi-day process. And we use, standard background and credit and eviction checks, but it's just done much faster and automatically at HomeRoom, which is really, really cool. And then if everything works correctly, a tenant can sign a lease and pay within 5 minutes of kind of picking a room.
That's crazy. I mean, what now, is that your own platform, or are you linking into other existing, platforms that do the screening and credit checks and things like that?
Yeah, we definitely leverage other softwares, but the core platform itself is our proprietary software that we've built and are continuing to build out.
Oh, very cool. Yeah, that's pretty amazing. That's a quick. That is a really quick screening process there.
Yeah, we're excited about it. There's no reason for it to take as long as it takes today. The technology and the databases all exist. And it's just really opening those up and creating a quick feedback loop that allows people to get accepted fast and able to sign their lease digitally and do everything very quickly.
Yeah, that's great. That's great. And generally, the first home you had is sort of the model for the others, in that each person has their own room, should probably share bathrooms, share kitchen, and the general living room space.
Yeah, that's correct. So, our investors are creating this type of property, right? So they'll buy the home and it will match the HomeRoom recommendations. We use the data science layer to identify homes with highest potential yield and appreciation. In addition to that, there'll be specs of what needs to be done to the property. And so that may mean building walls like I did on my property, but it always includes furnishing the common areas. So the common areas in the kitchen have essential items. Similar to an Airbnb, the bedrooms are unfurnished. And so this actually creates a situation where the investor yields the maximum returns because the property is set up in an ideal way for this living situation. And when it's set up in an ideal way, then investors make the most money. So it really kind of is this ecosystem in which everyone benefits from kind of this setup that HomeRoom has kind of perfected.
And your typical model would be a 4-bedroom, 2-bath type of a single-family home?
Definitely single-family homes. The form factor varies wildly. We have a 3-bedroom, 2-bath townhouse. We have 7-bedroom, 4-baths. It's all over the place. Typical form factor would be, a 4 or 5-bedroom house with 2 or 3 bathrooms. The more bathrooms, the better in the situation. Usually, it's important that the house has ample parking in front or on the property, as well as the shared bathrooms. Those are really the big keys to making it work for the model.
Now, a new investor coming in that says, "Yeah, this sounds like this might be a good deal for me." What price point are they usually looking at, or is it all over the board? And are they picking only within the markets that you're in, like you mentioned Dallas, Austin, and Kansas City, or can they go to other markets? And I know there's a couple of questions there. Sorry.
Yeah, no, that's great. So our goal is to be in every 1,000 different cities over the next 3 years.
Oh, wow.
Maybe 5, but we want to be in every city, because one of the things I found when I moved from San Francisco to Austin to Kansas City is that the need for people living in roommate houses was actually ubiquitous across the country. It wasn't just in San Francisco. It wasn't just in New York. So we're trying to offer this housing everywhere. So what that means is over time, investors will have a lot more choice. Today we're in 8 metro areas. We just added Phoenix. So we're in Kansas, Dallas, Austin, San Antonio, Indianapolis, Pittsburgh, and Tampa, and Phoenix just launched. So we're gradually rolling out larger metros and then going to be moving, into the smaller metros over time. That's one of the advantages of having our own proprietary technology, is that we're able to take that technology tool and just move it and copy it to the new metro. And so people can book like they're booking a hotel, in Phoenix, and that can happen very, very quickly.
And I guess it's kind of tough talking price points on things, but generally, what kind of a per room cost are you talking about for renters? And maybe you can give me a range.
Yeah, it really is so different. And you asked about the price of homes, and that's also super different. It really depends on the metro. The most expensive metro we have today is Austin. And so the rental range there is between $500 and $800 per room. And then property prices are between $500,000 and $750,000. There's also on the other side of the spectrum is a city like Kansas City, where the average price of a property is like $300,000, and the average room price is in the low fours.
Okay, gotcha. And so what sort of the range of the return for the investor for the most part? We
are looking for an IRR above 20%. So we typically can beat a syndicated deal, because you'll be able to capture more appreciation. There'll be less kind of take rate on the deal. And then cash yield varies wildly. Austin is the lowest, and then Indianapolis is the highest. And Indianapolis deals can be in 10% cash on cash yield, sometimes a bit higher.
And you mentioned syndication. Now, if somebody's just buying one house, he's not going to syndicate that one house, right? I mean, or you don't work that way?
I was comparing it to syndication there. I don't think I was.
Oh, okay.
Yeah, I was just saying we could do slightly better than, or quite a bit better than a typical syndicate deal.
Yeah, because I was thinking IRR, you're building it into the cost of the sale of the property, right? And most of these people are holding on to them for a longer term, I would imagine.
Correct. Yep. Most people we recommend a 10-year holding period.
Gotcha. Okay. And now, do you have properties that are available? Let's say an investor comes and he has no idea where he's going to find a property. Do you have some that are available that investors can come in and look at and as possible investments?
Yeah, the way we typically work is it's more made to order type investments. We use a technology that looks at every property that hits the MLS and underwrites the deal to make basically to show potential returns. And if one of the deals is in the top 10%, then we'll actually share that with our investor network and say, hey, here's a property we forecast it'll have a cash yield of 7%, and the IRR will be 23% for you if you buy with leverage. And so that's typically how we'll operate. We do occasionally have people that will sell their properties, and then those will be available as well. But usually we're going to buy a home on the MLS, do the work to the property to make it into a co-living property, and then we'll list it on the platform. And that's the typical mode in which we operate.
Got it. You'll find the investor after the property is ready, right? I would think that there'd be as with any rentals that are out there, there's got to be that property management element. The person who has to deal with the clogged toilets and the, or maybe the disputes between, roommates, everything from, I don't know, lawn care or whatever, across the board. Is there somebody in that role, or is that the investor's responsibility?
Yeah, so HomeRoom actually will handle all of that, and it's a purely passive investment for real estate investors.
Okay, so you have people on your staff that will coordinate any kind of maintenance, repairs, or even eviction issues, things like that.
Mm-hmm. Yep, it's all handled for the investors. They don't have to worry about anything.
Okay, well, that's cool. As far as what you have, currently in your offering, what seems to be the most popular type of home or situation? You could just give me an idea where the strongest demand would be.
It varies by investor. Some investors, kind of early in their investment life cycle, are looking for appreciation. So there's a strong interest in appreciation markets like Austin or Phoenix, and that's those are very popular, especially among technology workers. We also have, but for investors who are looking for more passive yield, they'll tend towards the cash flow markets like Kansas City, Indianapolis, and Pittsburgh. So it really depends on the investor's preference and what they really want. If they want to build wealth, or do they want to achieve more passive income?
And is there a sort of a different expectation in markets, let's say, where you may have a lot of students, renting, or young professionals, or what is your tenant? Does that tenant mix range from market to market?
It does. We're 21 and over, so we don't get a lot of students at HomeRoom properties. Our average age is actually 28.
Oh, wow. Okay.
But yeah, so we there definitely is differences in each market. Markets like Austin have massive immigration in and out of the cities. We see the income be quite a bit higher versus a city like Kansas City, where the income is a bit lower. People are typically born and raised in the city. So it just really depends on the market. But yeah, the 28, average age of 28 really is consistent. We find that there's a large subset of the population that's underserved by the current housing options. It's typically post-college, pre-marriage, which has sort of become a much larger population than it was 15 years ago, as millennials are delaying marriage into their mid, sometimes late 30s. And that's like such a long period of time, 2 full decades now after college, before marriage. And many of these folks are just not super excited about living in a studio apartment by themselves for that long. And so that's why there's more and more people living with roommates each year and each decade. It's been growing substantially. So that's really where HomeRoom's that's our sweet spot. And so that's, we do kind of hear, like, is it students that are living here? It's like, the answer is like very few. But it's, we do have a ton of folks in that, late 20s, early 30s demographic currently.
Gotcha. Again, I'm just kind of getting a feel for, I know it's difficult to nail down, but let's say I'm somebody that's moving to Austin. What would I be able to get a room for? What would be a competitive rate?
Between $500 and $800 would be, I think, pretty competitive.
Okay. Yeah. Because rents in Austin especially are just through the roof right now. So that's
no, they're going crazy. It's funny. Yeah.
And how are utilities handled? Are they paid separately, or is that factored into the rent amount?
We have an amenities and services fee, and so amenities include utilities. So our tenants pay a fixed amount each month, and that goes to cover all of the utilities, internet, main service, yard care, everything.
Gotcha. Well, just starting out, I mean, you definitely have take this to a new level here, and it sounds exciting that you're moving forward. What would you say one of the biggest mistakes was early on that you've learned from, and that has helped you to actually put together a better company?
Yeah, I mean, we've learned a number of things. One is who you hire matters more than almost anything else. And, it's hiring really, really well is really difficult. It's kind of the hardest thing. But it seems to always be worth it in our case. We find we have massive progress when we hire a really great person, even though it takes a lot of time and it can be exhausting to work that, to essentially be that selective. And then when you hire someone that's not amazing, it ends up costing you a lot of time because you could have been looking for the right person. So that's been a big learning at the company. The other is alignment around incentives. So one of the key things we make sure that we're doing is that the people who are in charge of sales are also in charge of the customer experience. And so that we're not selling something that we can't deliver on, because we think that the disconnection between the salesperson and the customer's experience after they buy, if that's not aligned, then you end up having a lot of unhappy customers. So we've set it up so on both sides, on the tenant and on the investor side of the marketplace, we have that alignment so that our sales folks are really trying to sell what we have and people are happy with what they get.
Right. And that the property management, I don't know if individual or team or whatever in each market, how much interface do they have with the actual tenants?
We're interacting with tenants as needed. Whenever they reach out to us, then we will kind of help them, either if it's repairs or challenges in the house. Our team is available all the time for them to communicate with us. Okay,
so they don't just schedule regular drop-bys just to check on things. They don't only go if contacted, right?
The main service is in there once a month, and so they'll actually do a kind of a state of the house report to us. So we'll be able to kind of see what's inside, and the maids will actually grade the house for cleanliness and report issues. So we're in there at least every month, but sometimes more often. But in terms of our team interfacing with the tenants directly, it's only as needed.
Right. And when you're looking for properties, how do you identify properties that you think will have above average returns?
Yeah, there's a few pieces to that. So one is our data science team has worked to basically predict property appreciation that'd be above the market average, and so they're using a bunch of different data sources for that. Some of it's as simple as crime stats, crime trajectory. One of the big ones is immigration in and out of that neighborhood. We also use some kind of nuanced stuff that's special to us. We use like Snapchat information, how many snaps are taken, Instagram activity, some other social media kind of like data sets that are available, and we integrate that. Our data science team has integrated those pieces together. So that's a appreciation forecast. And then on the rents forecast side, there's not really a consolidated room price database out there. So we actually have built a tool that will forecast rent. We scrape Craigslist, Roomster, a few other data sets, and then we use similar data, but just in different mix from social media usage, as well as from apartment prices. So all that's mixed together. My co-founder Mike is a data scientist from Airbnb, and they did a lot of similar things there to what we're doing at HomeRoom.
Interesting. That's great. And what did you institute maybe early on that turned out to be very successful for you, and something that has helped maybe even give you an edge in the marketplace?
Yeah, early on we had no money.
That happens with startups.
And yeah, a few other startups started off with a lot of money, actually. A couple companies out of San Francisco each started out with about $10 million. They hired San Francisco talent. They did software development very aggressively early on, and both of them struggled. In a way, we started with like my retirement savings, which was like $200,000 at the time. We did not have much money, so we used kind of grit and efficient options, because that's really just for survival, for the reason of survival, essentially. And it actually proved out that those pieces were actually better mixed than like what the bigger what those companies that had a lot of money were doing. So we actually were out, some of them didn't survive. Some of them we outgrew last year. But yeah, we just raised some money after Y Combinator, but this is the first real large batch of funding that we've received. It's been 3 years. So it's, I would say, like, starting from a bootstrap standpoint, I think can be a really valuable tool to building the right ethos in your company. And we're not necessarily we haven't won or IPO'd or anything like that, but I would say that it's why we're, so a lot of the success we've had has been because of that approach.
Right. Well, our audience are folks that are generally our target audience, should I say, are folks that are 50 years of age and older. They're looking at real estate investing as a means to help to maybe bring additional cash flow to their retirement years, or maybe they want to get the best return on their retirement nest egg. There's a number of different reasons, but real estate, because it is, it's just a great place, a great resource, because you've got, asset-based investing. And what for those folks that are you may be looking at co-living and as a possible area where they might be able to meet those goals, what would you say to them?
Yeah, I think real estate investing is a fantastic tool for kind of yield and wealth generation. It's really the returns profile really mirrors that of like a stock and a bond mixed together. But if the stock didn't really go down, right? Because real estate doesn't really go down in the middle of the United States, right? It just, even during 2006 through 2008, prices in Austin and Dallas and Kansas City went down less than 10%. So you're looking at one time in 50 years where we've seen a big decrease. So that's why I just think real estate is the asset class for later investment stage in life. It's so unerratic. It's so consistent. It's mirrored inflation's value increase for so long. So I just think it's second to none. Because when you look at bonds or treasuries, any of these other passive income tools, they're just not yielding enough. So I do think that real estate is definitely should be in the mix there. I personally am way over indexed on real estate. I have all my money in real estate, and I do not regret it at all for that reason.
And why would you maybe recommend or not recommend co-living as a more specific niche for real estate investors?
Yeah, the rent is 50% higher. And I probably should have said that earlier, but that's if you're looking for cash yield, and you're not going to do much better than co-living in terms of bang for your buck. It's going to be higher yields. It's going to be more consistent yields, because instead of having in a single family home setup, if someone moves out, you make $0 for a month or maybe even two, and then you pay for repairs. With co-living, you may have one roommate leave, but then you're going to still have 4 other roommates paying. So every month you'll have income. So it's a much more consistent revenue stream. It's a higher revenue stream. So yeah, I think it's probably the best. If you're looking for stability with premium yield, I don't think there's a better option than co-living real estate. Short-term rentals is interesting as well, good yields, but the consistency, you have to question that, especially after what we saw in 2020 and 2021.
And what percentage does HomeRun take out of that equation for investors if they buy that property?
Yeah, so we charge a 15% platform fee that's similar to Airbnb.
Okay, gotcha. And that covers everything, huh?
Mm-hmm. Covers everything.
That's great. That's really good. With co-living too, I'm just kind of curious, how do you pick markets? When you're actually looking to buy properties, are there certain attractions in those markets? Like for example, you were in San Francisco, you relocated to Kansas, and what? How do you pick markets that are sort of ideal for co-living?
Well, we think all markets work for co-living. We think that there's a need in every city. In terms of what's ideal for an investor, that is really relative to their risk profile and what they're looking for. If they're looking to maximize the yield, they can go to somewhere in the Midwest would be ideal to maximize yield, but they probably aren't going to get as much appreciation bang for their buck. If they're looking to increase their net worth, then a market like Phoenix or Tampa or Austin are really great options. So there's not really there are better ones, and generally better ones are going to have population growth. It's probably the number one piece that I'd recommend when kind of selecting properties. With population growth, you get a lot of positive things that come out of that. So a lot of our key things that we're looking at increase as populations grow.
Yeah, I know in Southern California here, I mean, there is a huge need for a service like yours, but the challenge is, the price of homes is so ridiculously high. I mean, do you have people that are looking to do this in markets like that, or up in the Bay Area, or parts of New York? I mean, are there just some markets it doesn't make sense?
Yeah, I mean, in San Francisco, it's actually even more needed. It's just harder for investors to buy homes, right? Because the homes are super expensive. But if you're looking at, let's say you have $20 million and you want to deploy capital into single family homes, buying a co-living focused home in San Francisco actually is a really good investment. Because the rooms would then, in those areas would rent for like $2,000 each. So you end up having a really nice performing asset that still has a really nice appreciation potential. So we'll definitely be in San Francisco, these more expensive markets in the future. But if you're looking just for like a nice cash yield asset where you deploy, $100,000, $200,000, then that's probably more a good fit for the Midwest. But there's a fit for this in most markets.
Great. And what excites you about the future of your company and your business, in the near and long term range there?
Yeah, I mean, a lot of it is just the massive surge of this population. In the 1980s, 11% of young adults 18 to 35 lived with roommates. Today, it's 27%. So there's just more and more people who are living like this. And, now we have 45 to 50% of people are living with parents in that age range as well. So it's very clear that student debt and delayed marriage and loneliness have created kind of this need for a different type of living that's not being addressed by apartments. And so that, we're really excited about those trends, and that it's a pretty wide open market. There's smaller players that have addressed this, around colleges mostly, but in terms of what this could do nationwide and eventually globally is really where our goals are. We see just a massive opportunity, millions and millions of people that can benefit from this product.
Great. Well, we are kind of rounding out the end of our interview here. We have a segment we call Wrap It Up, where I ask you a series of quick questions about resources that have been of value to you. And so you can share those with our listeners. If you are ready, we can go ahead and wrap it up.
All right, let's do it.
All right. Favorite real estate book?
I generally just listen to podcasts, so I don't actually have a favorite real estate book. I like The Richest Man in Babylon a lot, but that's more about assets and money management than real estate specifically.
That might fall into even this. The next question is a favorite general business book.
The Hard Thing About Hard Things. It's by Ben Horowitz. He's he's the general partner at Andreessen Horowitz. Basically talks about his own startup journey and how, the truth of things is that they're a lot more difficult and painful than, the glamour of starting a business appears on like TV and the internet. So I think it's a really healthy, good, balanced approach to thinking about the challenges of starting a business.
That's great. How about a website that you use on a regular basis that's been valuable to you and your business?
We use Slack. It's an app, but that's really valuable to our business in that we are able to communicate really quickly and to solve issues.
That's my next question, Ashley. What's your favorite app? So I've got the answer to that one. That's great. Okay. How about a favorite quote?
The favorite quote, it's a Winston Churchill quote. It's not the critic who counts, not the man who points out how the strong man stumbles, or whether the doer of deeds could have done it better. The credit belongs to the man who's actually in the arena. I really like that quote a lot.
Mm-hmm. That's cool. That's a good one. And here is our final question. If you lost absolutely everything, all your assets, and you had to start all over, and knowing what you already know, and you only had $1,000 in cash, what would you do with that $1,000 to relaunch your real estate investing business?
Yeah, so if I had $1,000 to relaunch my real estate business, I would do exactly what I did in Austin. There's down payment assistance programs that are available kind of nationwide. So if you're going to buy a primary residence, a lot of times you can do it with no money down with the help of a down payment assistance program. So I would buy a new home, probably in Austin again, but maybe it would be in Tampa or Boise or somewhere else that's really appreciating quickly. And then I'd rent out bedrooms and I'd live there. And then you're able to, if it's in a rapidly appreciating market, your net worth can surge really quickly. And so you could turn $1,000 into a couple $100,000 in a few years. But that's a great foundation for rebuilding a real estate business because you're able to pull some of the cash out as the appreciation happens.
I like that. That's great. Well, I'm sure there's a lot of folks that listening today that want to find out more about your business, what you do, and maybe they're even interested in investing. What's the best way for folks to reach you?
Yeah, you can reach me at johnny@livehomeroom.com. Happy to respond to any questions about, buying houses, renting out rooms, anything in that vein. And then livehomeroom.com/invest is how you would talk to us and set up a call with one of our team members to learn about potentially investing with HomeRoom.
Great. Well, we have a tradition here. We are called the Old Dogs REI Network, and so our guests close us out each episode with their best old hound dog howl. And you're in Kansas City. I know they got hound dogs down there, so just go ahead and just give us your best attempt here.
All right, I have a cold, so my voice is shot, but
all right, that was good. It was still good.
Thank you.
All right, Johnny. Well, thank you so much for being on. It's been really informative. Some good stuff here for our listeners.
Awesome. Yeah, no, it was really awesome to be here. Thanks for all your great questions, and really thank you for talking to me today.
No, it's my pleasure. I also want to thank all our Old Dog listeners out there, too, for joining us. I know there's a lot of other things you could be doing right now, but the fact that you've taken the time to join us means a lot, and we really appreciate it. Please note everything that Johnny spoke about today will be outlined in detail in our show notes on the Old Dogs website at olddogsreinetwork.com/blog, and you'll look for the episode with Johnny Wolf. Well, that is the show for today. Remember, cash flow is king and real estate investing the means. Until next time, keep moving forward and may God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.